Hello, everybody. Jim Malone here, coming to you live from Dell's Trading Floor. Well, it is Friday, and the market is still in an uptrend, but you wouldn't know it by some of these growth stocks. Basically, what's happening is we're having a rotation out of growth into some of the more cyclical names. As a matter of fact, it's very interesting. I went into a stock today that you've all heard of called Boeing, and it's up very sharply today. But the tech names just aren't following suit. It's like basically it looks like the techs are taking a rest, and a lot of the stuff is moving to some of the bigger some of the bigger plays that you've probably heard of. The Dow stocks. There's only 30 stocks in there, but that is the index that is by far doing the best today. So it's always an interesting thing here. You never could predict. You just kind of got to follow along with the market. Here's what's happening. The market isn't a confirmed uptrend. We moved from a market under pressure to a confirmed uptrend. Now, here's the thing. We are in a confirmed uptrend, but it's a bifurcated market. Basically, what's happening is most of the action isn't in the tech stocks like it's been. I mean, it's true. I mean, Tesla's pulled up a little bit, but it's still weak relative to where it has been. Now, it's still a very strong stock, but the strength isn't in a stock like Tesla, interestingly enough. It's in GM and Ford. So very interesting. Also, NIO is off a little bit as well. So we're seeing a movement kind of away from some of those techie stocks that we've been seeing. There's a good exception, and that is, of course, we've seen some strength in the semiconductor equipment manufacturers like AMAT, Applied Materials. But basically, we are seeing a movement more into the value-y, if that's a word, stocks. Well, the NASDEQ is off about 1% today when the slide was taken, 13,252, and it is below the 50-day moving average. So this is very interesting. I did have a hedge on yesterday with what they call the U-Pro. That's a triple index. Now I took that off yesterday because that's a hedge. That's a bull hedge on the S&P 500, and the S&P is off today a little bit, not very much, 0.06. So not a whole lot, just basically even on that. The real winner today has been the Dow Jones, and interestingly enough, that is essentially only 3 stocks. So it's interesting how that plays out. Just wanted to show you the chart of Boeing, and I think it's very instructive. I mean, it pulled above a buy point just right below. The buy point was basically just right below the 250 level. It's pulled up. It's up almost. The volume is not only is the price up significantly, but the volume is up, and that's what the key is. As you can see, there's significant volume that's come into the issue right there. So we're seeing a rotation out of some of the big cap tech stocks into some of the big cap Dow stocks. So that's something to be very interested and looking forward to. All right, here is the Invesco QQQ Trust, and here's what this is. This is essentially the NASDAQ 100. This is kind of what I'm talking about in terms of the rotation. As you can see, it's down today, and basically there's 100 stocks in this index fund, the QQQ, but it really is 7 stocks that are, that are the main stocks in there. They are essentially the FANG stocks, and they have not been performing quite as well as some of the other stocks out there. This is down a little bit, and you can see the relative strength line has moved down as well. It's about 50. So basically, what we're starting to see is, again, a rotation away from some of these really big cap stocks that were leaders, basically up until basically from last March on up till now. They've been leaders, but there is a movement, it seems, out of those big leaders into other stocks. Now, with that said, the stocks, there's really 3 indexes that I like to focus on. One, of course, is the Dow Jones, Then the other one is the QQQ, which is essentially the NASDEQ 100. It's the top part of the NASDEQ. And then the other one is the Dow. Now, the Dow is only 30 stocks, and the QQQ, which is an ETF, is really only 100 stocks. But the most broad index that I look at all the time is represented by the S&P 500. And this is covered by a ETF called the Spider. And the Spider is down, but just slightly, not a lot. The key level on this is the 40-day moving average, and it's above. The 40-day moving average is currently at about 380. Is it about 383 right now? So we're well above that. So that's looking good. It did test a little bit earlier here, but it's continuing its upward trend. So the S&P itself is looking fairly good. It's a little off a little bit today. The reason I spend so much time on all these directional indicators is it kind of gives me an idea of where I want to be putting my bets. And I have rearranged the small portfolio somewhat to make that that difference. I moved more towards sort of the cyclical type names like Halliburton, that's an oil service company. Boeing, of course, that's a well-known company. Also, Ford is in there, and some of the other companies, and very pedestrian type of businesses. Simply Foods is in there, for instance, as well. So we're moving more towards the stocks that were beaten down over about the last year, from the end of the coronavirus recession sell-off from about March till now. It has been the story primarily of the growth stocks up until about a month or two ago. Now it's starting to rotate out of that area into the other area of the more cyclical stocks. So I just want to show you the ETF that covers the Dow Jones 30, and this is an important chart here too, because this, as you can see, the other two charts were down, but the Dow Jones the Dow Jones ETF, the Diamond, the DIA, is up, and it's up very, very significantly. So we have money moving away from growth into some of the very biggest stocks the Dow Jones represents. Just want to show you another chart that might be of interest to you. We do have increasing economic outlook, and this is an investor business daily poll. I called it, and this shows basically the economic confidence, and it's sort of moving. It's moving back to where it was right before the election in October. So that is a good sign. I think we're maybe getting back to normal, hopefully, with some of these reopenings. And that's really where the trade is moving. It's moving to some of the reopening type stocks. I've been saying don't buy airlines for months now, but now I'm starting to move into those areas, because as the anticipation for the reopening happens, and Boeing is really the bellwether for that, as Boeing goes, so will some of the airlines. The reason for the big movement in Boeing stock was that Southwest Airlines made a huge order, and of course Southwest is the most profitable of all the domestic airlines. It's trades under symbol LUV, which is that's a symbol for Southwest Airlines. I want to show you also kind of what I'm looking at in terms of sectors. The sectors of the economy are very important. I typically like to, when there's a movement away from growth areas like we've been having, I want to see kind of where the best performing sectors are right now. And currently, the best performing sector right now is the oil and gas drilling sector. So that's one of the reasons why I have a position in Halliburton. And also, I did initiate a bull call spread, which went out to everybody on the Action Trade Alerts, on the symbol RIG, R-I-G, and that's Transocean. They're a big driller, primarily in the Gulf of Mexico, but they're also worldwide. So there is money moving into this area significantly. Interestingly enough, there's some interesting things that we should be start to look for value opportunities here. One of them is the mining and metal ores. This is a business that, normally is terrible, but it's because of the way that the reopening is working. This one might be of interest. There's a particular stock in there. It's called Vale, V-A-L-E is the symbol on it. And what it is it's the largest it's a South American mining company, and they are the world's largest producer of nickel. And nickel, of course, is very, very important. Everybody's been concentrating on lithium because obviously that goes into the lithium ion batteries for, electric cars like Tesla. But interestingly enough, the real limiting factor is not necessarily lithium. It is the element nickel. Nickel is very important, and so the nickel miners are doing well. And the biggest nickel miner right now in the world is Vale, VALE. So I just kind of wanted to go over that with everybody. All right, just kind of want to show you where my holdings are currently, and these are my long holdings. I do have some short holdings that I haven't put up here, but basically I talked about this. I have Ford. It's up about 4% today. Volume's down a little bit, but it's seeing some nice movement. It's essentially kind of a slow pokey stock. The buy point on this was 12.14. It's currently at 13.35. So it's made some good progress, but it's not like Tesla. I can tell you that. Halliburton, I'm also in Halliburton, and it's up just slightly today, with a little bit of decrease in volume. So not really. I like to see increases in price and in volume, as that really shows conviction. Rent-A-Center, I've done very well in Rent-A-Center, down on volume, but up on price. So good there. Also, Granite Construction. This is a large, heavy construction company based in Watsonville, California, that does a lot of highway construction. And then if this stimulus package gets passed, they're likely to benefit from new road construction. Simply Foods, of course, I'm in that as well. It's down a little bit today. And also Westlake Chemical, it's down today. This is a Houston company, basically in the specialty chemical area, and they've done quite well, which is interesting. And of course, I started moving in on the small portfolio to Boeing. I bought another full position, well, actually several positions in one of my other accounts, and that's BA. They're up about 16. Actually, they're up about the volume is up about 134, and also there is strong. There's a strong price action that's up about 16.63. So without further ado, let's get to some of the questions, and thanks for holding on, everybody, here. Let's see. My screen is once again frozen up. Oh, there we go. Yeah, it's back. Hopefully I'm going to get this situation with the bandwidth taken care of here shortly, and it won't be such a strange deal here. There we go. Okay, so just put up the charts, as it were, and let's go to the first question. Thank you for holding on. Okay, great. Okay. All right. Drunk Squidward. Glad you found my name funny, but the market really is volatile. Your thoughts on CMI? Okay, here are my thoughts really on these shares, and that is, we're seeing a something that you probably have not seen if you've not been in the market for a while. We're seeing a rotation, and so all the kind of stocks that we've been trading like for the first few months of the year, they're just not doing well. But oddly enough, the real economy stocks are doing great, and this is a good example of it. Thank you for bringing up this stock. This is Cummins, of course, and as we know, Cummins is one of the largest builders of diesel engines in the world. So it's kind of a tried and true business. I mean, I do think there's going to be a lot of electric trucks eventually, but right now, Cummins is a total leader in not only marine engines, but in engines for all kinds of heavy trucks and medium-sized trucks. So they're doing very well. They're up today, $4.29. Now, here's the thing with this this reallocation. There is going to be a reallocate right now. Cummins is extended. What I mean by that is that it's above its buy point. The pivot on this is 244.67 on a cup basis, what they call a first stage cup. And this is we were in a buy zone up to about 254. We're currently at 279 on this. So If we were to buy it at this level, we would be what they call extended, which means there'd be a higher likelihood that this would fall back. It's a good stock. I mean, look at this, 7 out of 9, 77%. On the checklist. This is the William O'Neill checklist that I always like to use because it grades growth stocks better. But what I'm probably going to try doing, because we're in a kind of a growth stocky area, is I'm going to go to a more value investing screen, and that's the Benjamin Graham screen. There we go, and that gives us 11 out of 13, which is actually better. So, for at least for right now, I'm going to switch my screening to a screen that screens better for what I consider to be more growth oriented, more growth oriented screens, and that is the Benjamin Graham screen, or possibly the Warren Buffett screen. But I like the Benjamin Graham screen better, and that is so it's very strong in terms of this new value orientation that we're seeing in the market. Basically, we have funds moving into this. There's 2314 funds in it currently. And the industry, and this is what I wanted to talk to you about. Currently, right now, the industry rank is not very good at 123, trucks and heavy parts. That's the one area that I don't quite like. But other than that, everything is good on this stock. Here's the thing. With this kind of market, it's going to be a little bit slower market for the next few months. So we got to be careful. I would watch this one, and I probably would not buy it because it's extended. I want to buy just the very best chart patterns that I possibly can, and those are going to be ones that are coming right off the start. So here's what I would say about Cummings, and I appreciate you bringing this. I would be waiting for this one to possibly form another base. Now I could be totally all wet on this, but it looks to me like it's a little bit extended. You could buy it at this level. If you did buy it at this level, you probably shouldn't buy more than a quarter position. Now, what do I mean by that? Well, if you took the total value of your portfolio, if you had, let's say, an $8,000 portfolio, you divide that by 8, kind of like pizza slices. That's going to give you 8 distinct positions. So what I mean by a quarter position would be it would be a fourth of that eighth. So what we'd be looking at if we had let's say $8,000 portfolio, each full position would be worth $1,000, and each quarter position of that would be worth $250. So I would probably, if I were buying Cummings with a $8,000 portfolio, I would probably only start out with one quarter position, or about 1 share. So that's kind of a little bit of math, but this will let you move into it. Right now, I wouldn't buy this at this level because it's extended, and you don't want to buy them extended because they typically will pull back on you, and that's not necessarily a good thing. All right, so thank you very much for that question. CMI, let's ARCC. Let's look at ARCC. Ares Capital. Okay, that's investment. Okay, so this is a lean company, mezzanine debt. I don't particularly like this area. I think there's other better places to be in the market. I would not recommend this one. I think there's just other better ones. By the way, if you want to be in the financials, I think there is a stock out there that would give you some nice exposure, and it is a stock that I haven't bought yet, unfortunately, mainly because it just hasn't been in the right chart pattern. It's a company called Jefferies. It's an investment bank in New York, and it's trading about 32. It's absolutely top rated, and it's doing extremely well. Here's the chart for Jefferies, as you can see. Now, what do I mean by extended? Well, I like to buy them off of consolidations, and right now there is a stage 1 base consolidation at 24.30, but it's above 5% above that, so I'm gonna pass on this one as well. But that's the kind of thing, if you're looking to get exposure to the financials, that's one of the ones that you might want to look at. Jefferies, symbol JEF. All right, so here we go. How long would you hold BA? Here's what I would do with BA. I do think we're in a reinflation, kind of a reflating trade. Boeing probably is. Now, it probably will pull back tomorrow. Let me be honest about that. I bought it right as it moved past when it was in the buy zone, right as it moved past the first stage cup base at 244. The pivot is 244. Unfortunately, I didn't buy it right at 244. I bought it at 255, which is a little bit above that, but it's still within the buy range. Here's the thing: I would hold. Basically, I'm looking to hold Boeing up until it gets approximately, and I think it's very likely that it will go to this level. If it starts getting to about 293, I'm probably going to be taking some off. I'm probably going to be selling half of my position, and then letting the other ride, because I don't want to buy it too extended, but I also, with these stocks, these are a little bit different than some of the tech stocks in that they move a little bit slower. So I want to, if we get to 20% profit, I'm going to be taking half off. So I'm looking at about 293 on that. So we've got a ways to go. I think you could definitely hold it for a little bit. So let's look at this question. AMC is looking good. Yeah, how much longer? Okay, this is a good question. And this might be right. I mean, this AMC. Let's take a look at AMC. Yeah. Okay. So yeah, we've definitely retaken. Yeah. Let me show you the chart for AMC. What I'm going to do is I'm going to shift from the daily chart here to the weekly chart, so kind of get an idea. To show you see, this was the spike here. There is a buy point on it, a cup base at 735, and currently it's at 1111. So it's actually not all that far above. I mean, it is extended just slightly, but it's such a cheap stock that I think that this is not necessarily a bad place, a bad entry on it. I'm not currently in this stock, but I do think that with the market change, with the market moving to the reopening trade, I mean, actually, when this mask mandate ends, AMC should do well. I mean, it hasn't done well in a long time. Let's look at the chart. As you can see, I mean, really the fair value of this is about $20 a share based on this chart. And of course, we're at 11, and it moved up. It's 11.15 right now. So it's up $3.10, which is incredible. The buy point is really right here. It's at 735. So here's what I would do. I would watch this one and see what happens. See if there's a pullback tomorrow. But if it does move higher, basically, I think that is potentially buyable now. I mean, I last week and the week before that, I was very skeptical. I'll be honest with you, very, very skeptical. But look at this industry rank; it's improved tremendously. It's 28 out of 197, so that's an excellent rating. But that's a total change. That's how the market is working. The checklist, basically on the Benjamin Graham, is terrible. It's 23%. So this is definitely an issue. This is why it's being shorted, by the way. Is that when you see stocks like this that have these kind of ratings, this is when the shorts kind of come in. So this is why I always check this to see kind of what the deal is. But the William O'Neill screen is actually much better. And so, interestingly enough, you've kind of got to compare these. The checklist, the 55% checklist, is the William O'Neill screen. So I actually, for this kind of company, I probably would tend to lean more towards the screen, the William O'Neill screen, and that does seem to be far better. So where would I enter this thing? Well, you know what, I do think that it is possible, to be in this stock. Obviously the best place to be in it would be about 8. As you can see, that's where a lot of people came into the stock, at about 8. But it is extended a little bit. Here's the thing: I would be a little bit cautious. I would buy it if it probably went, and normally I wouldn't do this, but I would consider buying it if it went above 12. So here's how I would set up a buy order on this one. What I would do, and I'm not in this one right now, so I have to be, fully disclose this, but I'm not in this one now. I might buy this for the small portfolio just for fun, because I have a little bit of extra capital left in there. So what I would do, here's how I would buy this one. A buy stop limit at and I think about $12 and plus about 10 cents. So I would be looking possibly on good volume to move in. This is about 12.10. Now, what do I mean by that? Well, let's see if I can get a cursor again. Oh, my cursor has disappeared and I've frozen. There we go. All right, so save that. So here's how you possibly could come into the stock. Now, again, this is speculative, and this is not a recommendation, but I'm thinking this is how I would enter the stock if I for AMC. As it's, you want to move it, you want to buy it only as it's moving higher. Okay, so the key level, based on what I'm seeing here, is about a little bit before 12. Right now, it's trading at about 11.15. I would probably try to buy it a little bit above that, because in order for it to move above that, there's going to have to be strength, and that will power it higher. So I'm looking possibly at a buy stop limit order at 12 plus 10 cents or 12.10, but you probably could cut that down to, about, you possibly could look at it at like 11.50. Okay. 11.50 plus 10, giving us, when I get a cursor again, there we go, about 11.60. So that's another possible that's another possible entry point. Oops, there we go. Yeah, that's another possible entry point, is about 11.60. So here's what I'm going to do with AMC, because I am kind of interested in the stock. I do think it might do very well in a reopening trade. So I'm going to set an alert here for 11.50, and so I'm going to set that. So that's how I would do it for AMC. So that's very interesting. That's a very interesting suggestion. Really like that one. And so that's how I would do it. Not a recommendation, but kind of where I'm at. All right. Well, thank you very much for the question about what stocks I'm looking to buy right now. Well, I am kind of very interested in this reopening trade. I mean, I really hadn't thought of it, because I kind of move with the market. I'm essentially I try to follow along with where the capital is going. There is a stock that you've all heard of that I am quite interested in, believe it or not. I actually have a buy stop limit order on it right now, and that's Marriott. And I am not, normally during the last year or so, man, I like staying at Marriott's, but I certainly don't. I certainly didn't want to own it. Well, I am changing my mind. And the reason I'm changing my mind is because of this reopening trade. Let's take a look at this this chart here. Very interesting chart. It is it's basically, let's see if I can blow that up there a little bit. Yeah, there we go. Great. This is on the weekly chart here. As you can see, we had a buy point on it at 135.84. It's currently at 150. It's up $3.23 today. Now, it's a little extended, but as you can see, I don't know if you can see this, because it's hard to see on the screen, but I have an alert on it, and that's essentially where my buy is. If it moves above that, now it's extended. I'll be honest with you. Normally, I don't like to buy a stock that's extended above its base like this, but if you look at this carefully, you'll notice there's a pocket pivot. Okay, let me see if I can zoom in a little bit on this. So it'll give me the opportunity. I'm going to go up to about 200%. So hopefully we can see this, and hopefully it'll let me do it. There we go. Okay. So I want to kind of show you, if you can see this on my screen, you'll notice that there was a flat base there, and the buy point was 135.84. Well, it moved beyond that, moved above that buy zone, but it pushed up very significantly with this bar right after, the day after that it made the pivot, and then it pulled back. So it's getting ready. this stock is getting ready to push higher. There's no question about it based on this, the way this is looking. So even though it has a terrible relative strength at 62, normally I like to buy at least 80. I think that this one is one that you might want to consider looking at potentially. Now, would I buy it? I'm looking to buy it as it moves higher. I do think that this one is buyable now, but it is extended. You've got to be concerned when a stock is extended. I do think this one though is buyable, and so it's Marriott. MAR is the symbol on that one. All right. So let's see if we could get a question from TikTok. So I'm gonna right. So I'm gonna see if I can pull up TikTok here. So on TikTok, let's see if we have a question. I'm just going to look here. Right. Oh, here we go. Okay, great. I saw your put spread on ARK. Does that mean you're expecting you expect it to go back to 90 by April? Well, actually not. I expect it to move up. I expect it to move up. For everyone out there, I did a bull put spread on ARK, and the reason I'm setting those numbers lower is for safety. No, I do expect it to move higher, but it has been a little bit weak on the performance. So let's take a look at at the ARK chart. And by the way, if you're on TikTok, you can jump over to you can jump over to YouTube and see the chart that I'm showing right now. It's youtube.com/Dallas Trading Floor. So let's go over to the chart for ARK. Hopefully I'll get the application window there. There we go. All right. So for ARK, let's go to ARK, ARKK, and of course this is an ETF that Kathy Woods runs very successfully. She's one of the top managers in the world. It's up a little bit today, and we're after hours. Actually, what I'm looking for it to do is I'm looking for it to continue back above the 40-day line. So the way that my bull put spread works is if it moves above, if it moves above, that's going to be where the profit zone is. Let me see if I can pull up just really quickly. Let's see if I can. I don't know if I can pull up the actual chart of that, but no, I expect ARK. Let's go to let's see if I can. I'm just trying to think where that would be. Well, I don't know if I can pull it up right now, but basically, yes, I did have a bull put spread, but I do expect the price to be above 126, and that's sort of where it's going. But I will, if you're interested in that, I did send it out on the Action Trade Alerts, and if you write me on Dallas Trading Floor, go to dallastradingfloor.com. I can send you out the slides on it as well. So thank you very much for that question. That was a very good question on what do I expect for ARK. I do expect ARK to recover a little bit, and that's kind of what I'm looking at in terms of in terms of things going on. Is the GBTC really an inflation hedge? No. That's a very good, astute answer. Good, astute. It is not. What it really is it's a. I don't really believe it's an inflation hedge. What I believe is it's more of a. It's more of a sort of exposure to sort of the new economy, the sort of the frictionless new, what goes for the frictionless new economy. And that is, it's pulled back today, but it is in an upward trend. This is the daily chart that we're looking at here. So I'm going to kind of draw a trend line here. And I'm currently not in GBTC. That's sort of the trend there. I do have an alert here. I'm looking possibly, if there is a bounce to this line about 26.44, then I'm looking to come back into it, because I do think it's going to come back and test possibly this level. This is the former. I do think it's going to test this level, so I'm looking for a pullback. If there's a pullback and then a reversal, that's where I'm probably going to buy it, and I'm looking to buy it at about 26.44. That's essentially what I'm looking at now. Currently, it's way above that. It's at 49.90. Now, why would I buy like that? Well, normally I say to buy as the stock is moving higher, and I definitely believe that. The thing is, but you've got to wait on a pullback. You've got to wait for it to pull back and then reverse, and then as it's reversing higher, that's when you want to buy it. So I have an alert set at 28.44, but I don't believe it really is an inflation hedge. I do think we're going to get a lot of inflation. I do think, with all this money coming into the market, I think there's going to be a lot of inflation. Now, interestingly enough, certain areas of the economy that basically tend to do better in inflationary areas. That's the reason why there's so much movement into the oil sector, because even though eventually we're not going to be using oil for our cars, we're going to use electric, that's still a ways away. And so there's going to be movement into the oil sector. Under the last administration, the price of oil in the went down tremendously. That because of the restrictions now, it's going to move up. So I suspect we're going to have probably $5 to $6 a gallon gasoline in San Francisco by the summer. That would be my guess. I'm originally from there, and they always have the highest in the nation. Currently, gasoline here in Dallas is about $2.30. I do expect it's going to move up probably to right about $2.50 to maybe $2.65, right in that area. If that happens, of course, that connotes a lot of inflation. So in a long story, I don't believe that GBTC is an inflation hedge. What I do believe is it's exposure to sort of a new kind of way of dealing with value. It's essentially a replacement for. It is a store of value outside of the dollar system. That's really the only way I can explain it. And it's very interesting. The way I do play it is with the GBTC, and of course, the GBTC owns about 4% of the world's Bitcoin. Jim, it seems like GM is pouring an Adam and Eve. Any thoughts? Thank you. Let's take a look at GM. Interestingly enough, in my whole career up until just like recently, I had never traded GM. Now I'm currently not in it. I did sell out of it. I did buy it at the buy point, and then I sold it. I sold it on a cut basis. But it's really interesting to me, because I do think that this year is probably going to be a very big year for GM, because GM is very, very likely to start to really make a dent into some of the electric vehicle sales with Tesla. Tesla, has a full order book, and they basically have everything that they have is committed for sale right now. GM, not the case. GM can outproduce just about anybody on the planet. So I think that, the future looks very bright for GM. Now, I'm not in GM, but in the small portfolio, I am in Ford. And I do think that Ford also is a good opportunity. There's also another one out there called Stellantis. They just make up these names. And that basically is Fiat Chrysler plus Maserati plus everybody else and their brother. And that just came on as a stock. And I think that I'm looking at that one. I'm not investing in it currently, but I'm looking at that one. I just want to show you also, because we're looking at GM, I want to show you the chart for Ford. I think the chart for Ford is better actually than the GM chart. Now, here's the thing about Ford. I mean, Ford is a cheap stock. It's only $13.36. I started buying it at about 12.15, actually 12.14. This was the pivot that I moved into it at, and it's done very nicely. It's moved up very, 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 very well. I think looking back at the weekly chart, and that's really where I have to look. It's essentially retaking, an area that it used to. Oops, let's see if that works. It used to have, and again, my screen froze again. So you're probably hearing me, but okay. This is the This is the monthly chart. Let's see if I can pull that up. Yeah. All right. There we go. This is the monthly chart. And the reason I looking at the monthly chart is this kind of gives the history of it. All-time high for Ford basically came way back here. And so Ford is not extremely valuable company, and not like GM was, but it still has some potential. And I think that up to about $16, I think Ford is a pretty good investment. After that, it may go higher, but that's kind of one of the things I wanted to show you with GM. I think GM is solid, and even though it's a little extended, I think it might be, it still might be a good answer. To answer your question, I don't exactly know what an E formation is. I wish I did. Let's see if it's forming a. I just want to look at the see if I can. There we go. There we go. Okay, I do think it's forming. There was a cut base here at 46.71, and then it does. You know what? This is really actually buyable right now because there's a pocket pivot, and it basically goes. And the pocket pivot is basically right here. I mean, it's about 41. There's definitely a pocket pivot. So I think that you could buy GM right now, actually, and I don't think it would be that much risk to buy it at this level. So very interesting. I wish I knew what the Adam pattern is, so maybe I could find that out. VUZI. Thanks, Dinesh. Let's look at VUZI. That's what Dinesh says. Okay, this is binocular systems. Interesting. I don't know much about this at all. I've never heard of this company. Kind of see if I can get it to. There we go. Well, it has a very strong relative strength. Let's see. It's 77 checklist, so that's good. Ownership. It's got some funds in it. Interesting. Okay, and it's at 28. So this is not looking bad. Let's kind of. I want to do a screen on it for. Okay, I want to look at the value screen here. I want to look at the value screen. He doesn't like anything. So. Wow. Okay. Well, it does look. It is very extended. There was a buying opportunity, basically. Back in the January timeframe at 531, there was a cup base. It's currently at 21. I just don't know what's going on. Why it's up $6.08? There's got to be something. Let's look at the short interest in it. I can't seem to. Okay, well, yeah. Okay, I think there's a lot of shorting going on with this stock. That's what it looks like to me. This is a relatively thin stock in terms of its, in terms of its size. I mean, it's still pretty good. I mean, average daily volume 5,751,000, but I just don't know about this one. This is interesting. I can't really give you okay. Here's the thing. Here's what I would do with this one if I was trading this one. If I was looking for an entry point, I would wait on this one for 3 more days, because earnings are in 3 days on this, on the 15th of March. So I would wait a little bit on this one, see what happens. Now, if you're in the stock, here's what I would do. Here's what I would do. Wait, wait for, well, it's going to be on Monday. Here's the thing. I would probably sell this on Monday. And the reason I would sell it on Monday is because we're coming into earnings. And I think that it's probably a good idea to sell this one into earnings and see what happens, because there might be a significant pullback on this one as it comes through earnings, even if the earnings are very, very good, because that typically is the pattern with the stock that's run up so quickly like this one. So that would be my take on it. Now let's look at the daily chart on this one, and I kind of want to see how they're trading. Well, was an event in early part of the year. There was an event, and then wait a minute. Okay, okay. So interestingly enough, yeah, Here's the thing. Here's what's happening on this. The ownership in this company is selling their stock, and that's why I know that, because that's a negative sign there. So that doesn't necessarily mean anything, by the way. It's actually when the ownership of the company is acquiring more stock. That's really when it's of major interest. So that doesn't really tell me anything either. So here's what I would do on this one. I'd be cautious. It looks like the volume's been coming up. We're 3 days away from earnings. Earnings are going to be on Monday with this one, Dinesh. So I would consider selling it on Monday, seeing how it trades through the earnings, and then if it trades well, then I would possibly move back in. But right now, that's exactly how I would trade it. Thank you. Do you think Apple is headed to a lower low? That is a good question. Wow, great. Man, that's definitely. And this is a bellwether stock, meaning that this is going to represent a lot of stuff in the FANG. So the only FANG stock that really seems to be doing well right now is Google, and they seem to be doing very well. But Apple has been selling off. I mean, I have an alert on it. If it comes up to the 40-day line, it looks like it's headed down to the it looks like it's headed down to the 50-day line. Now, for lower low, I think that the last, really the last really lower low was about 53.15, and that was way back. So it's got a long way to go for that. But I do think it can move convincingly through the 100 mark. I do believe it's going to pull back to the 50-day line. Here's the thing. You just don't want to catch a falling knife on this one. Right now, Apple is the action on Apple isn't very good. I mean, this is the level that you have to watch out for right here with the 200-day line. This is the black line here. That's what you got to watch out for. It's selling off after hours. I'm not, the trend is not your friend on this one. On Apple. I've been out of Apple for a while. That's the trend on Apple. So it's a downward trend. Let's see if it holds at the 200-day line. I'm going to put an alert in. Let's see if I can. Oh, hopefully it'll give me, there we go. Set the alert. I want to set the alert on this one. Well, I'm going to look to set an alert basically on this trend line. What I'm going to do here, my software allows me to do this, is I can draw a trend line, and then if it breaks that trend line, that's when I'm interested in it. So I'm going to set an alert on that trend line. Oh, well, it should allow me to at about 120. All right, so all right. Wasn't let me set it. Okay, let me look at the price of the 50-day average, 114. So that's the key level for me right now, is about 114. So if it breaks below 114, then I'm interested. But right now, I think you got to stay out of the water on Apple. So 114 is where I'm going to set my my alert on Apple. I do think that if it reverses off that 200-day moving average, then you could possibly buy it. But right now, you just got to be careful. It's, again, so many people are taking profits on this one, and they're moving into other areas. I heard that Warren Buffett sold a ton of this stock. So let's take a look at okay. CCIV is probably going to be very bad. So that's. But I want to take a look at that. That obviously they're trying. I think they're going to merge with a company called Lucid. So I don't really recommend buying these SPACs. I think that because they don't have earnings, and I know that Churchill Capital has been a big deal, but it for me anyways, I don't like them. Yeah. Okay. So we've pulled back to the 40-day line, and let's put that up for everyone to see here. Yeah. Okay, so here, this is Churchill Capital on the daily chart. This was the blow off top. This is essentially a climax stop. Went up to 64.88, and now it's pulled back to the 40-day line. I would just avoid this thing at all costs. I know that people on the Reddit boards have, it's a popular one on the Reddit boards, but I think that the risk level on this one is just too high. Because it's a blank check company. As you can see, This is sort of the sucker's bet. I mean, I'll be honest with you. They get people excited, they get it out there on Reddit, and they pump it up, and then when it hits the top, it's sell, 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 and everybody gets killed. So I think that's what they're going to do here. It's pump and dump. So would I be in this one? No. I think you got to be very careful with CCIV Churchill Capital. I know that they offend a lot of people, but I do believe that it is essentially a pump and dump operation, to be honest with you. Let's look at Palantir. Now, Palantir is a real company with real earnings and real customers. So I like that one. It started to move back above, and it didn't. Now, obviously, there's no 200-day line here because it hasn't been in existence 200 days. This is essentially an IPO. I do have an alert on this one at the 40-day line. I'm interested in looking at this one only if it moves above the 40-day line. Currently, it's at 27.05, and that is not enough. It's below the 40-day. If this thing crosses the 40-day on heavy volume, then I'm possibly interested. But so basically, I want to see it cross above 28.50. That's where I want to see it cross above. It's almost there. It's at 27, but I want to see it cross above 28.50 in order for me to be excited once again about Palantir. All right, let's take a look at NEO to see what's happening there. And the thing with Chinese stocks, and this is a Chinese stock definitely, the Chinese EV makers had a tremendous run up, and they kind of trade in sympathy with Tesla. As Tesla has moved off, these have too. It seems like we had a bounce at the 200-day line, and not quite. It didn't quite get down to the 200-day line, but it definitely bounced. It's still below the 21-day line. Now, what do I mean by that? Well, the 21-day exponential is really what I call kind of the Goldilocks line, okay? It's just if it trades above that and it sticks right to that, that's really a Goldilocks stock. It's not too hot, not too cold. But right now, this is below that. And so I'm not really as excited about it. I do have a new, I have an alert on it basically at the level of the 50-day line, and that's at 54.34. But right now with, I just think you got to watch this one. I don't think you can be in NEO right now. It's just too low. If you're down more than 7%, you might want to consider possibly selling, because that is freeing up some capital, because there's going to be some opportunities. It's just that right now the market is moving away from some of the growth stocks into some of the more cyclical stocks, such as the Dow stocks like Boeing, and those kind of where you got to look, I think, for value. Interesting. Haverty Furniture. Wow, this is interesting. I know Haverty Furniture, absolutely. They're here in Dallas. So my girlfriend, she likes to go to those furniture stores, you have to admit. So they're looking pretty decent. This is actually not a bad place to be in the market right now. It's a very boring area, but retail, especially like, fix up the home type retail, is doing very, very well, after getting just killed. This is actually pretty good. 85 out of 197 sectors. So it's actually not looking bad at all. Normally, in normal circumstances, I probably wouldn't be a buyer of this, but it doesn't look bad to me. Let's look at the William O'Neill screen. Yeah, it's very good, 77%. So that's good. I haven't been in this area, to be honest, but it has 374 funds in it. So that's looking pretty good. This is not a bad chart. I mean, actually, this is a very good chart. Let's look at the weekly. Yeah, this is just a very, very nice chart. It's just moving nicely up the 40-day moving average. So I just really, this is great. Unfortunately, this one doesn't have a proper base in order to buy it on. This is what they call an ascending base. This is kind of a chart pattern where it just kind of moves up it just moves up a index line, and the one that's moving up is the 50-day, and this is very, very good chart action. Look at that, earnings per share up, Last earnings, 243. Very good. The next earnings are coming up, but they're due on the May 20th. But this is looking very, very good. This is not going to be something that is going to excite me that much, but it's not bad. You might want to look at another stock here. This is a good stock. It's called Kirkland. Oh, no, put the Container Store up there. That's another one here in Dallas. This is oops. I keep getting the Container Store. That's not bad either. Yeah, it's called Kirkland's, and this kind of similar pattern on this, very, very highly rated, by the way. This is another one that you might want to look. It doesn't have quite as good a checklist though as HVT. So I think that HVT, that's looking very good. Will, that's a really good choice. That's a really good choice. And it doesn't really give you a place to buy it, but it's looking very strong. And that one should do well on the reopening economy. It really should, because it is people are spending money in their home and getting all that stuff ready. So not bad. Thoughts on Toyota? And of course, Toyota Motor, TM, is it was the largest vehicle company in the world for many years. It is not anymore. Interestingly enough, Tesla is bigger. But in terms of its relative strength, this I'm very familiar with it. They actually moved their North American headquarters from Torrance, California to Plano, which I'm actually very close to Plano. So it's very interesting. Great company, great products, very well run. And it just, but it's not really very exciting. It's below a pivot. Let me see if I can, let's see if we can take a little closer look at the chart and see if we can take a look at that pivot. It's really a consolidation, so it's not necessarily the greatest of all chart patterns. It's pretty stable, man. This is a pretty stable stock. It's got a very low relative strength at 33, but that's not surprising. Until very recently, until really Tesla came along, the motor vehicle stocks were not very exciting in terms of where they were. So it just seems to be moving along. I wouldn't recommend this one because I think there's better ones in the group. I think there are better ones in the group. I think GM is going to outperform this, and it's a much cheaper stock. This is a solid company. But I don't think you want it. I think in the airline and in the automotive stocks, I think that probably you want to look at Ford and you want to look at GM right now. And I never thought I would say that because the domestics seem to be doing very well in that area. So great, thanks, Byron. Let's look at OIS and see kind of what's going on there. Oh, I guess. And that's, oh yeah, okay, very good, cool. Okay. Now, normally, in the normal world, I haven't been in the oils for a long time, but you know what? This is not a bad play. Look at this chart. This is a decent, really good chart, actually. It's got a 93 relative strength, and it's moving right up. It's above the 10-day moving average, so it's looking pretty darn good. And it's an $8 stock, and you're like, wow, $8 stock that I actually look at. Normally, I don't like to buy stocks below $10, but this one, this isn't bad. Look at this. It's got nice fund ownership, 292 funds in it, so that's pretty good. Let's look at this. See, this is what I really like, oil and gas, but I like this ranking here. This is so important. Definitely looking at the oil and gas stocks, you're going to the right place. You're looking at the right kind of things, because right now in the economy, that's where a lot of this capital is flowing. It's flowing into the oil stocks. It's number 10 ranked, so that's pretty excellent when it comes to that. Now the question is, where can we buy this? And if can we buy it, first of all, and where would we buy it? Now, I do like the fact that it's pulled back to the 10-day line. What I would really like to see in order to buy this was a pullback to the 21-day line. So here's what I'm going to do. I'm going to look at see exactly where that 21-day line is at. Okay, the 21-day line basically is at 640. So here's what I'm going to do. I don't know if it's going to pull back to that low. I really don't, because at least what I'm seeing on the price action here is it's looking like it's just staying right above the 10-day line, which is, by the way, excellent. But here's what I'm going to do. I'm going to set an alert at 640 on OIS, because I think that might be a very key level. Now, hopefully I'll get my cursor back here. Yeah, there we go. Oh, there we go. Okay, 640. There we go. So let's put that in there. All right. So I have it on there. So I like this one, Byron. I think it's pretty darn good. I think you've it's pretty darn good. Here's what I would do with this one, OIS. I would wait for a pullback, and then hopefully, we could get something that works better. I'm putting my alert, and I'm not buying it, my alert at 640. So thank you very much for that. All right, Mr. Jim takes a look at BLDP. All right, let's take a look at BLDP. BLDP. And that Ballard Power. This is actually a good one. I'm familiar with this company. It's been around a long time, and they've made electric buses probably for longer than anybody else out there. It seems to have bounced off of the. It seems to have made a bounce off of the 200-day line, so that's looking good, and it's currently above its 10-day line, so that's looking good. The relative strength is excellent, 88. I definitely like that. So let's kind of look to see. I love the fact that it's got a 13 sector rating. That's very, very good, because it's in the energy alternative other area, but this is a good rank. This is a very, very good rank in terms of sector. So the money is moving into this sector. That's a good thing. Let's take a look at the fund ownership. It's pretty good, 340.35. So that's looking good. The only downside here I could see is the checklist. Here's the thing. I probably, on this one, because of the way it is, I kind of want, I want to watch this one, see how it performs, see if it moves up to the 40-day line. Now, the 40-day line, the 50-day line, the 50-day line is basically at 26.36. So we're almost there. Oops. Let's see if I can actually track that price properly. Yeah. Okay, so we're pretty darn close to there. But here's the thing. I would wait until this one moves up to that 50-day line. I would watch this one. I don't think it's a buy right at this very moment. Let's see if I can get a better feed on that. It should be about 31. There we go. Okay. There we go. 31.12. That's where I would buy it above 31.12. But I would possibly think about putting a position on at 31.12. I would not necessarily buy it, but I think at this point it's essentially a watch list on that one. I think it's a watch list, but it's a good company. Ballard is a good company. All right. Hey, question. Oh, this is a good question. Thank you. Thought on UDOW, UDOW. And of course, this is the triple. This is the triple index ETF for the Dow Jones 30, and it's just doing super great. This is actually a pretty good strategy when you see a sector rotation like this, and that's essentially what's happening. We're having a sector rotation out of the NASDEQ really into some of the Dow stocks, and to a greater extent some of the S&P stocks. But this is looking pretty darn good, at least for the last few days. Here's the thing. This is a hedging vehicle, so if you do decide to move into this one, and the way you read a chart on an ETF is a little bit different than with an individual stock. So this one is very, you could enter this, but here's the thing. Be very careful when you enter this one. Make sure that you put your stop loss up at only about maybe 2% below where you bought it, because when these things reverse, they reverse hard. So I definitely like this. I like this idea. Now, I had a hedge. I closed it yesterday at the end of the day, towards the end of the day, on the S&P 500 in triple leveraged ETF, which is the Now I'm thinking UDA. It was a triple F, but I closed that one. So this one might be good, but be very careful. These things can turn very, very quickly. Well, I've come to an hour today, and I'm talking, and thank you everyone for taking a look. If you'd like to get on the list for the action trade alerts, and this, this basically what I do is I try to show, kind of the trades I'm looking at, and if there's a change in the market condition, it's super easy to get them. All you have to do is go to www Dow's Trading Floor and then just first and last name and email address, and you'll be on it. Of course, it's all free. And if you're looking on TikTok and you'd like to see all the charts and everything that I went through today, it's available about 5 minutes from now. The whole show is recorded, and it's available on YouTube at youtube.com/Dow's Trading Floor. Now, if you're on TikTok and you want to get a copy of how to get started in basically trading, I do recommend this book highly. It's available off of my link, and the way to get to that is just to go to my profile, hit the beacon. It says beacons. Just hit that, and then it will bring you directly to the link page. And then again, that's where you can also sign up for the action trade alerts too. First and last name and email address, and get that going. And of course, it's all free. And then also you can see the upcoming, the upcoming video, the upcoming live show that I will be doing on Monday. So until Monday, happy trading. Everybody stay safe. And the market is changing direction. Be very careful about entering positions in the in some of the old tech sectors, because the movement is away from the tech sectors, at least for right now, into some of the more cyclical areas, such as the Dow stocks. That's one of the reasons why Boeing did so well today, and possibly some other ones. So we're in a confirmed uptrend. We're not in a correction anymore, but the NASDEQ is selling off a little bit still. So you want to be very careful with the growthy type names that we've been in since the beginning of March of last year. So the market is changing somewhat. So until Monday, happy trading.